Hi Simon, thank you for joining us today to talk about the IML Smaller Companies Funds. Now you've been with IML for 15 years now, and just wondering if you could give us some background on your experience in the small cap space.
Yep, sure. As you mentioned, Sam, I've been with Investors Mutual now for 15 years. I've been managing the small cap products for over 10 years, and applying the same consistent philosophy that the business was founded on since day one. Prior to that, I was at QBE as an investment analyst. So, been a long time in the industry, very experienced, and seen many cycles. So, I think that makes me very adept to manage a small cap portfolio.
Thanks, Simon. Now, all of IML small cap funds have significantly outperformed their benchmarks over the financial year of 2013. What do you feel has been the key to the success over this 12-month period and also over the longer term?
Look, the key, really, Sam, is no secret. It's been the consistent application of our investment philosophy. So focusing on those companies that have a high level of recurring income stream, that have good management, that pay a consistent dividend. So stocks like Energy Developments, which has been a really good performer for us over the last 3 years, but particularly the last 12 months, is a very consistent cash generative business, generates electricity effectively from landfill gas and waste coal gas. It's been a really good performer. Looking for a return to dividends this year, so it hasn't been paying up till now, but we've been pushing very hard for a return to dividends. Stocks like Coventry Group over the last 3 years, Amalgamated Holdings, a very consistent performer for the portfolio, focused on hotels and theatre. Good cash generative businesses, not necessarily high growth, but pays a good consistent yield and a debt-free balance sheet.
Fantastic. And Simon, not everyone would have small caps in their portfolios, but what would you see as some of the advantages of investing in the small cap space?
Look, the real advantage as a small cap manager is that you have a very broad portfolio of stocks to pick from. So you can find stocks which are, even in a difficult economic environment, are still doing well because of either they might have a small market share in a sector and they're able to grow into that sector, or a lot of small companies are very much more nimble than some of their larger brethren.
Okay, great. And Simon, what would be some of the key holdings in the portfolio at the moment, and why would you be holding these stocks?
Look, stocks that we've got core positions in, things like Shopping Centres Australia and SP and AusNet, so two very stable, predictable businesses that generate cash. In the case of Shopping Centres Australia, it's a regional shopping centre spin-off from Woolworths, so 60% of their rent comes from Woolworths. Not a high growth business, but a good predictable yield play. SP and AusNet, the Victorian regulated utility, again yielding over 7% at the current prices with good regulated asset-based growth in this market. Looks like a good opportunity. Other stocks that we've got positions in, things like Amalgamated Holdings and Energy Developments, I've already mentioned those. We think they still have good prospects going forward. Another market stock that's done well for us is Prime TV, the regional affiliate of Channel 7. They've really benefited initially from loss of ratings by Channel 9, and now more recently by the loss of ratings of Channel 10 in the regional areas.
Okay, thanks, Simon. Now, there's been a lot of, sector dispersion within the small cap space over the last 12 months. Just wondering if you could, comment on where you're being cautious or seeing opportunities in the various sectors, and where you may be positioning the portfolio for the next 12 months.
Look, Sam, the focus of the portfolio hasn't really changed. It's been consistent now for 5 to 6 years. We see the market and the economy is in a very slow growth environment. So we're looking for those companies that we think can do well in this slow growth environment. So we're looking for companies that have the ability to either to grow into a new market segment or an underserviced market segment, and able to generate some growth because of that, not relying on a big cyclical recovery in the economy. And so we're quite cautious on resources and mining services, for instance, which is a big part of the index. Those stocks in that sector have had big pullback, but they're very hard to value given the low quality of many of the resource bodies, or limited earnings history of many of those mining services companies. It's quite a very cyclical and very volatile sector. So a sector we're quite cautious on. But generally we're just focusing on those companies we think can do well. So I've mentioned some of those before, but Tox Free Solutions, another business we've owned for some time. It's been a good performer over the last 18 months. A business we think can do well by growing into the industrial services and high-end toxic waste markets.
And just quickly, I'm just wondering if you could comment on the opportunities in the small cap space to generate income.
Look, I think there's a bit of a misnomer or a misunderstanding of the small cap sector that many small caps are purely invested in for capital growth. But I think if you look at the income history of the small cap products that we operate, we've always generated a large part of our return from dividends and from the income that stocks generate. And there's still, there are very attractive income streams being generated by some of the stocks we own. So Amalgamated Holdings yielding 5% current prices, SPN, Shopping Centres Australia, I've mentioned those already. Stocks like Dawn Group, still yielding about 5%. There's still an opportunity to buy good quality industrial stocks with reasonable yields, and of course the franking benefits, given the large domestic focus of many of those businesses. Those companies generate pretty a large percentage of have a high percentage of franked dividends, and so those franking credits accrue to our unit holders.